Hello, dear viewers. I cordially welcome you all to my new lesson on the topic Refund of GST. Before we move on, I want to tell you about GST. GST or Goods and Service Tax is a single unified taxation regime which has transcended the entire nation by subsuming the current or the prevalent taxes like value added tax, luxury tax, sales tax, excise duty, etc. And now we have only a single indirect tax system called GST, whereas the direct tax, that is income tax, is still prevalent in the country. So here, as per refund of GST, it is contained in section 54 of the Central Goods and Service Tax Act. So here there are some points which a person has to follow, or there are some cases whereby the refund of tax is available to the taxpayer. The first case is any person who wants to claim a refund of tax must apply for the refund before the expiry of 2 years from the commencement of such transaction. For example, if Mr. A has purchased some goods and paid tax on 5th January 2015 and he is liable to get a refund of the same tax, he must apply for the same before 5th January 2017, that is before the expiry of 2 years. That's the first point. Then, any person who supplies goods to United Nations organizations, some subsidiaries, or some embassies or consulates, the consulate or embassy or UN agency is liable to pay tax. So such agents has a right to claim for the refund of tax. So for them, the refund of tax is available. Then any person who's having an excess input tax credit still remaining or idle ITZ still remaining in the electronic credit ledger can claim the same as a refund of tax. So what is input tax credit? Input tax credit can be defined as the difference between output tax and input tax. Output tax is a tax received on sale of goods, and input tax is what is being paid on purchase of goods or raw materials, etc. So here the supplier can claim for ITC, and if any excess ITC still prevails in the account, electronic credit ledger, then he could claim for the same. And tax cannot be refunded without providing any documentary evidence. So it is mandated to have or to submit certain valid documents like invoice in some cases, invoice, then etc. like that. Some documentary evidences like that to the council for claiming a refund of GST. Okay, then on receipt of the application, a proper officer may scrutinize the application and may order for the refund of tax. Okay, so only after careful scrutiny and analysis, a person who has the ability or who has the right to get refund may be refunded after proper clearances. Then, notwithstanding anything to the contrary in subsection 5 of the Act, then a provisionally balance of 90% may be granted for zero rated supply. So what is zero rated supply? Zero rated supply is the supply of goods and services to CEZ, special economic zones. In Kerala we have Cochin Special Economic Zone, whereby the main aim of CEZ is to attract foreign investors and FDI mainly, foreign direct investments mainly, and then tax on output. Sorry, export. Export is also considered as a zero rated supply. Then, in such cases, a provisionary balance of 90% may be initially granted to the taxpayer in case of a refund of taxes. Then, the proper officer shall issue an order for the refund. The proper officer who scrutinizes the same may issue for the refund of tax within 60 days from the date of receipt of such application. He has to do that like the same. Then, notwithstanding anything contrary in subsection 5, then the refundable amount can be, instead of being credited to the fund, can be handed over to the a taxpayer directly in certain cases. They are in case of zero rated supply of goods, that is supply of goods and services to CES, special economic zones, or in case of exports. The next cases in case of unutilized ITC, excess ITC or idle ITC in the electronic credit ledger, and in case of tax, refund tax period on supply which has not happened. The invoice has not been issued, the order has been placed, and the supply has not taken place. The goods have not been transferred from the hands of the supplier to the hands of the buyer. And refund of tax in pursuance of Section 77. Section 77 deals with those transactions which were earlier intrastate. Intrastate means within the state, but which later became interstate. Earlier, the transaction was intrastate, that's within the state, and now due to some reasons it's become intrastate. Then next one, if any person has been found guilty or in case of fraud or misfeasance etc., that person is not liable to get refund of tax. And if is found acquitted or if he is left free of this guilt, then he has the liability or he has a right to get the tax, has a right to get the refund amount along with the amount of interest not exceeding 6%. That's another rule. Then any claims which are below 1,000, any claims of refund which are below 1,000 may not have the right to get a refund. That's another thing. Then in certain cases, a registered person, a person who has registered under GST, may have some dues of funds, may have some defaulted amounts in case of penalty, interest, fines, dues, etc. For such person, he is liable, or he has a right to get the refund in certain cases only when he has paid the amount defaulted, earlier defaults made by him in respect of this fines, duties, penalties, etc. Or the amount of refund can be adjusted with the amount defaulted. So only after deducting the amount defaulted, the refund amount can be paid back to whom? The person. Then, so these are the important points contained in case of refund of tax. Hope you've understood all the points. Thank you for your patient listening. Thank you.